I get a lot of questions every day about trading. The most asked question, how do I get consistent returns no matter what the market is doing? Well, today we're not going to talk about that question. Rather, we're going to go to the second most asked question. How do you know when to enter and exit trades? I'm calling this short presentation Patterns, Disruptors, and Manipulations. From the feedback I get from you all, I know that you like these videos. Apparently you're picking up good insights and trading tips from them, and your own trading is improving. Yay! Because that's exactly what my goal is, to see you become a better trader. I appreciate your feedback, and I ask a small favor. Please like and subscribe to this channel below where you see the button. Lots of feedback and questions this week on the price action we saw on BBBY. That's Bed Bath & Beyond. Before I get to BBBY anomaly, I first want to lay out some background to help you understand my answer. Price action trading usually happens in patterns in the market. There's an overall pattern for the market, but there are also patterns for individual stocks as well as sectors and industries. The pattern I watch for most is at support and resistance areas. You'll find that the price action tends to reverse as it hits those areas. If the price is going up and there's a historical resistance, the price 9 times out of 10 is going to reverse. The same is true as the price is going down towards a support area. The price will tend to reverse and go up at that support area. Is there magic in these support and resistance areas? I wish there were, but the answer is a big sounding no. The magic is because everybody sees them and says to themselves, I better trade there because the price is about to reverse. And because everybody's trading there, that's what causes the magic, and I'm putting that in air quotes. And the price does reverse there. Remember, it's volumes of shares traded that move prices up and down. Moving averages are also areas where you're going to see higher volume and price reversal. Now on my charting, I use the 50-day moving average, the 100-day, and the 200-day moving average. I see price movement the same way I see a herd of cattle. If you were raised on a ranch or a dairy farm, you're going to get this analogy right off the bat. The herd is usually a very cohesive unit, moving together. One steer may be on the left for a while, but he's going to move eventually and be on the right for a while, an hour later. There's a lot of milling around by individual steers, but the herd itself looks pretty much the same. The point is, if the herd looks cohesive in its movement, look for patterns and reversal areas to place your trades and your exits. Which brings me to the next point, disruptors. A disruptor happens when there's trading and all of a sudden the pattern is broken. You'll see gaps up and gaps down. So what disrupts trading patterns? Well, how about an earnings announcement, which is where the company is announcing their quarterly financial results and their future outlook, and the trading herd reacts strongly one way or the other, either positively or negatively, and the stock breaks out of its established pattern. There are all kinds of announcements besides earnings of a company that can affect prices. Think of an announcement about mergers and acquisitions. How about drug trial results? Lawsuits, and even the settling of lawsuits can all be disruptors of price action. And there are disruptors that affect the whole market, not just one stock or industry. Government announcements, CPI report, that's the Consumer Price Index, jobs report, prime interest adjustments, even news events that are catastrophic like 9/11 all affect the price action on the market. As a smart trader, you should always ask yourself some questions. Will this disruptor affect only the stock or will it affect the whole market? Another question, how long is the effect of this disruptor? And the final great question to ask yourself is, how can I benefit from this disruptor? How can I place a trade to take advantage of the price action change? All disruptors and their effects are easy to spot with volume spikes. I do a search every day after the market's been open about an hour to an hour and a half, looking for these disruptors and their high volume spikes. I'm going to share how I do it. There's a free website out there called finviz.com. Once you open that up, select Screener from the top menu bar, and then All from the next menu bar. On the various search filters, go to Price and select over $15. Why $15? That's because that's where big money, they don't trade below that. They buy stocks that are greater than $15. Average volume, I like to see over 2 million shares traded a day. Industry, I want to look at stocks only. I don't want to look at bonds or any other kinds of ETFs. You want them to be optionable, so choose optionable. And I usually only look at the stocks that are US companies. And then below that selection screen, there's a list of stocks that meet all the filtering criteria. On the right-hand column, you can sort by volume, and I sort high to low. And then I look at the first 20 stocks listed on the front page with high volume. What I'm looking for are either companies that are never on that list, but all of a sudden have extreme high volumes. That's what BBBY was. Or I look for a company that's always on the list, but trading at a much higher price. For instance, Apple. It's always on the list, and it normally trades around 70 million shares a day. All of a sudden, let's say it trades 200 million shares in a day. I want to know why. I look through the news next to get the answers to my why question, and then I decide, is there a trade in there? That brings me to the final point, market manipulators. Now guys, I was born and raised on the right side of trust and belief. And to this day, I trust people to act honorably and with integrity. But I've learned through some very hard lessons that not everybody follows the same code. My big lesson, it came in 2011 on a stock called Jammin Java Corporation, Jamn. An email blast came out. College student is making a fortune on new opportunity. And then it listed all the reasons to invest in Jammin. The price went up and then it crashed. Well, I now understand there was a group of people who had bought the stock cheap and then went out and hyped it on the internet. The fools, and I'm pointing a finger at me, bought into that hype. And as soon as the price soared up, those original investors sold off, they made a bundle, and they left the rest of us holding the bag. More recently, that same manipulation has happened on GameStop and AMC, and the other day it happened on BBBY. My warning is not everybody acts with integrity in the stock market world. I have no respect for those manipulators and really hate to see people harmed and taken advantage of. But I found a way to benefit from their actions and have shared that trading with my investing buddies. And if you would like to be a part of Investing Buddy conversations, here's your opportunity. Hit the button below. It's your chance to try us out for 2 weeks free. If you find we're a fit, if you like our educational training, you like our trade alerts, well folks, you found your home at Investing Buddies. And I can't wait to meet you on our weekly webinars. Thanks for listening. This is Maggie Roth. I'll see you next week.